Welcome back to the show, and today we're diving into one of the biggest stories to hit both tech and crypto this year. Amazon's colossal $50 billion investment into AI infrastructure, and the question everyone's quietly asking. Did Amazon just light the spark that could trigger the next crypto bull cycle? Now, before we dig into all of this, thank you to everyone who has been hitting the 5-star rating on the show. We're now only around 10 ratings away from the 200 target, and once we hit it, 2 listeners will get 50 XRP each. If you've already rated it, just drop a quick done so we can add you in. And depending on how strong the interaction is over the next week or so, we might even add another giveaway before Christmas. But let's hit the 200 first, and then we'll decide what's next. So let's get into Amazon, because this story is way bigger than most of the crypto press is making it out to be. The headline number alone, $50 billion, is ridiculously large. It's one of the biggest capital deployments Amazon has ever announced in a single push. And the focus is crystal clear. AI infrastructure, high-performance compute, expanded data centers, next-generation chips, and the backbone required to dominate artificial intelligence for the next decade. But the reason this matters to us isn't just because Amazon is making a big tech investment. It matters because when a company of this scale commits that amount of capital to the future, every other major institution, including crypto investors, recalibrates their risk appetite instantly. This is the part nobody is spelling out clearly. When Amazon goes risk on, the entire market loosens up. It's almost like a global signal that says, we're ready for the next cycle. And crypto reacts to that signal faster than anything else. That's exactly what we've seen over the last 24 hours. Bitcoin pushing back towards stability, altcoins refusing to break down, and miners reacting almost instantly. All of that is tied to this shift in macro tone. Because think about it, Amazon isn't just another tech company. It's a trillion-dollar barometer of global economic confidence. And when they're willing to put $50 billion into infrastructure instead of sitting on cash, cutting costs, or waiting for the economy to settle, it shows they are positioning for expansion, not contraction. That has a knock-on effect on every sector that thrives in risk-on environments, including crypto. And in fact, crypto usually reacts first. And this is where things really start to get interesting, because if you zoom out and think about the long-term impact of what Amazon is doing, you start to realize that this might be the clearest early signal we've had in months that the entire macro environment is preparing to shift. For almost 2 years now, the global economy has been stuck in this strange limbo. High rates, cautious capital, a wide gap between tech optimism and real liquidity. Everyone was waiting for a trigger, something big enough to say, risk is back. And now, suddenly, Amazon may have just provided it. Remember, companies don't spend $50 billion by accident. Boards have to approve it. Shareholders have to lean into it. Analysts have to model it. And when a mega-cap company is comfortable making a move that large, it tells you they're not expecting an economic downturn. They're expecting acceleration. That confidence bleeds into every part of the financial system. And right now, crypto is the first place to show signs of catching that wind. But let's go deeper into the mechanics of why Bitcoin responded so quickly. Whenever you get a macro catalyst tied to energy, chips, compute, or infrastructure, Bitcoin reacts before anything else, because Bitcoin is basically a proxy for future compute growth. Mining is a competitive race to secure as much energy and hardware efficiency as possible. If AI is about to explode, miners know their own sector will benefit from the flow-on effects: increased chip production, better GPUs, improved cooling systems, and more abundant data center power. Amazon expanding that entire ecosystem helps miners indirectly, but in very real ways. That's why you saw miners surge. That's why Bitcoin steadied. That's why the sell-off stopped. And that's why the chart looks far healthier today than a week ago. A big macro catalyst just landed in Bitcoin's favor, even though it wasn't aimed at Bitcoin directly. Before we get into what this means for your portfolio and the major altcoins, we are going to take a quick break. Stay with us.
Avoiding your unfinished home projects because you're not sure where to start? Thumbtack knows homes, so you don't have to. Don't know the difference between matte paint finish and satin? Or what that clunking sound from your dryer is? With Thumbtack, you don't have to be a home pro. You just have to hire one. You can hire top-rated pros, see price estimates, and read reviews all on the app. Download Thumbtack today.
What can 160 years of experience teach you about the future? When it comes to protecting what matters, Pacific Life provides life insurance, retirement income, and employee benefits for people and businesses building a more confident tomorrow. Strategies rooted in strength and backed by experience. Ask a financial professional how Pacific Life can help you today. Pacific Life Insurance Company, Omaha, Nebraska, and in New York. Pacific Life and Annuity, Phoenix, Arizona.
Now, when it comes to altcoins, this Amazon story creates something different altogether. Bitcoin reacts through infrastructure. Altcoins react through narrative. And the narrative here is incredibly powerful. AI and blockchain convergence is one of the strongest narratives going into 2026. It's clean, it's simple, and it makes sense to new investors. Nobody needs to understand deep tokenomics to understand that AI requires infrastructure, and that centralized infrastructure eventually hits scalability limits. That's where decentralization becomes attractive. Amazon is building the centralized AI superstructure, but decentralized protocols will end up filling the gaps, supporting the edges, handling the workloads that Amazon doesn't want or doesn't prioritize. This is why tokens connected to AI use cases often rally off the back of AI announcements, even from companies that have nothing to do with crypto. And it's why many analysts believe AI narratives will be one of the next major altcoin drivers. But Amazon didn't just drop money, they dropped a timeline. And this is the part that should excite crypto investors the most. They're not investing $50 billion over 10 years. They're deploying it aggressively, starting immediately. Infrastructure expansion begins now. Data center build-outs begin now. Hardware procurement begins now. This isn't a long-term, sometime in the future plan. It's an immediate capital deployment. And when capital moves quickly, markets react quickly. This is also why the market's reaction wasn't violent or irrational. Usually when something pumps crypto, it happens all at once. But today felt different. It wasn't euphoria, it was relief. The market didn't run, it exhaled, it found footing. And that's the exact psychological shift you see at the start of a new phase. The panic disappears, the fear evaporates. Traders stop waiting for the next leg down and start watching for the next opportunity. You saw this clearly in the stablecoin supply. For the first time in days, Tether issuance ticked up. USDC inflows increased. That's not retail behavior. That's institutional desks and large traders preparing dry powder. And they don't do that unless they feel confident the bottom is in or close to forming. Now let's talk about Ethereum and Solana specifically, because these two chains are almost always the best indicators of how altcoins will behave in the coming weeks. When Ethereum is weak, altcoins freeze. When Ethereum is stable, altcoins start to breathe. And Ethereum has been remarkably stable since the Amazon news broke. No major drop, no panic, no breakdown of structure. Just calm, controlled trading around the upper $2,900. Solana, meanwhile, has held its range better than almost anyone expected. Sol is usually the first to nosedive during volatility, because it's one of the most heavily traded altcoins in the market. But this time, Sol refused to break down. It didn't panic. Even at the worst part of the dip last week, it held far stronger than its historical behavior. That's a sign of underlying strength, and a sign that liquidity is ready to rotate when the time is right. Another overlooked aspect of Amazon's announcement is the effect it has on the overall tech risk premium. When AI is hot, everything connected to cutting-edge tech becomes more attractive. Crypto isn't seen purely as digital money anymore. It's seen as part of the digital infrastructure of the future. Storage, compute, payments, identity, assets, and smart automation. When AI expands, crypto expands. They move together now. Amazon just strengthened that link massively. But one of the best signals from all of this comes from where Amazon's money is going. It's not content. It's not entertainment. It's not cloud marketing tools. It's hardware, chips, compute, energy. These are foundational industries. They're the bedrock of every major technological cycle. When a company pours money into foundational tech, they're saying something very clear about the next decade. It will be built on raw computational power, not soft tech. And raw computational power is exactly where crypto thrives. Think about Bitcoin miners again. Think about L2 scaling. Think about Solana validators. Think about decentralized AI networks. Every single part of crypto's infrastructure benefits from a world where compute becomes the new oil. And Amazon just signaled that the new oil boom is beginning. You're also seeing something important in the way traditional analysts are talking about this. It's subtle, but noticeable. Instead of treating crypto as a speculative outlier, more analysts are mentioning crypto in the same breath as AI, chips, and infrastructure. They're grouping them together. That grouping alone is a psychological shift on Wall Street. When crypto gets grouped with infrastructure, it gets taken more seriously. And when it gets taken more seriously, liquidity flows more efficiently. And that's why today's price action, the stability, the resilience, the refusal to break down, tells us something deeper than just a rebound. It tells us the market is preparing for a narrative expansion. Not just a bounce, not just a recovery, but a shift into a new macro story where crypto sits at the center of the transformation happening in tech. And we're going to push deeper into this in the final section, because the real question isn't whether Amazon influenced today's market. It's whether this marks the beginning of the next liquidity cycle, and just how big this impact could get once other megacap companies start responding. And as we pull this all together, the real takeaway from Amazon's $50 billion AI expansion is that it signals a shift in global sentiment that crypto has been waiting for. Markets don't move on buzzwords, they move on conviction. And when one of the most valuable companies on Earth commits to a multi-year build-out of compute, energy, and data center infrastructure, they're telling the world that the future will demand more power, more capability, and more digital throughput than ever before. Crypto sits right at the center of that world. Bitcoin has already shown us the first hint of this. Not a euphoric jump, not a meme-driven rally, but controlled strength. The kind of strength you get when the market realizes that the next technological boom is starting to take shape. And altcoins, especially those tied to AI, scaling, and infrastructure, are beginning to position themselves for that same shift. Liquidity is slowly coming back. Stablecoins are edging up. Traders are preparing. And analysts are beginning to talk about crypto not as an isolated sector, but as an extension of the coming AI megacycle. If Amazon is the opening shot, others will follow. Meta is neck-deep in hardware again. Google is trying to catch up. Microsoft is already heavily in the game through OpenAI. When companies start competing to build the computing backbone of the next decade, the spillover effects into crypto aren't optional. They're guaranteed. This isn't speculative hype. It's dry powder, infrastructure growth, and technological alignment all happening at once. So if this week felt different, that's because it was. This wasn't a random green candle. This was the market reacting to a structural shift in how the next 10 years of digital innovation are going to look. And if history is any guide, moments like this don't just stabilize markets, they ignite the next narrative. Crypto isn't reacting to Amazon. Crypto is preparing to grow alongside the world Amazon is building. Remember to comment your thoughts below. Give the show that 5-star rating, and as always, we will see you at the top.